All right, you're about to embark on your home buying journey. And right off the bat, right out of the gate, you want to know, how am I supposed to get the best interest rate for my mortgage? Great question to ask, right? And I want to help you get there. So first, there's two categories of clients who, if you're in these two categories, this is exactly how you get the best rate for your mortgage. Number one is a client who has a lot of liquid assets under management with a financial advisor, with a large financial institution. If you're one of these people who have millions of dollars in assets under management and you want a mortgage, you want to go talk to your financial advisor, and they're gonna pair you with the arm of their institution that handles mortgages. They're gonna offer you a mortgage rate that's well under market. And frankly, other mortgage lenders don't want to even compete with that rate. They're gonna offer you this because they make a lot more money on your assets under management and advising you in that space than they do on your mortgage. And they don't even want to risk you talking to another institution about your mortgage. So if this is you, you've got a lot of liquid assets, talk to your financial advisor. They'll hook you up with a really low mortgage rate. Now, the second scenario is a client who's extremely well qualified and knows exactly what they want. Really high credit score, really easy income, probably not a self-employed borrower, probably like a W-2 salaried earner with high income, and you've got plenty of funds and you know how much funds you want to use, and also you know what mortgage type, what combination of down payment and closing costs and discount points and rate, and you know all those options. And you also know how to get your mortgage process and through the process to closing without a lot of questions or support. You're going to want to go to an online lender that doesn't do a whole lot of advertising. The online lender that doesn't do a lot of advertising doesn't have a lot of support. So without this overhead, without any advisors or a lot of staff, then they're able to offer you a really low rate. These online lenders are going to be a Google search away, do some click-throughs and find out. And then the mortgage process, what's that going to look like? It's probably going to be working mostly from an app or talking to a bot or calling a 1-800 number for customer service. Hopefully you don't need that, right? If you're purchasing a home, probably stay away from this type of mortgage company. But if you're refinancing and you're willing to take a gamble and you don't really have a closing date or deadline in mind and you know what you want, you don't need any advice, then hey, go for it. That's just my advice, right? How are you supposed to know how to get your best interest rate on a mortgage if you're not part of those categories? Well, I'll tell you, a great place to start is a referral. If you have family, friends, real estate professional that have done 1, 2, 3, many transactions with a loan officer and had really good experiences, well, that's a great place to start, but it's not your end-all be-all. You still want to do some research. If the loan officer has done much or any work at all, they should have some reviews online for you to go out there and see what other people are saying about working with them. Then you also want to ask them some questions, right? Want to make sure you feel like you're going to work well, feel like they're giving you what you need for the mortgage process. The question that we get all the time is, hey, what's your best interest rate? That question has a great intent, but it's not the best question to ask. And let me explain why. You could ask, hey, what's your best rate? And knowing nothing else about you, the mortgage loan officer could look at their rate sheet and all their programs and all their options and say, our best rate is for this program, but just tell you the interest rate. When that program is not the best one for you, you may not even qualify for that program. So they're quoting you a rate that really doesn't matter. Another example is they could quote you an interest rate that has a lot of discount points, and we'll cover discount points in another video, but discount points are essentially extra closing costs, and it could be thousands and thousands of dollars extra to buy your interest rate down. And a lot of times that's not the best rate for you. That's not the best option. What are some questions that you should ask or could ask instead of, hey, what's your best rate? One question that you could ask that's similar, that kind of gets to the same result, is where do you stack up against the competition? Are you better than most? Are you average? And I would also ask a few other questions when you're interviewing your loan officer. Say you go on vacation or get sick, who else should I contact about my mortgage? If it's a 1-800 number, red flag, right? How consistently do you close on time or schedule to close? Have you ever had to deny a loan that was in process? If there's a mistake, who's responsible for paying for that mistake? And my number one favorite question, how do you know that you're putting me in the best mortgage for me? Listen to what the loan officer has to say. If the loan officer is talking all about the product, the process, the price, everything but you, that's somebody who's trying to sell you a mortgage. If the advisor is talking about your goals and how we're gonna gather your goals for your payment, your goals for your cash to close, and how long you're gonna live in the house, that's how you tell the difference between somebody who's selling you a mortgage and somebody who really cares about you and is looking out for you and your family's goals. And don't forget, guys, that there's plenty of information online. Information is readily available. Sometimes it's a day or two old, and when you're comparing interest rates for a mortgage, rates change daily, and sometimes they change a lot throughout the day even. So you really want to be within the same time window when you're comparing. What's harder to find are the assumptions and the fine print, and to know exactly how much that's going to cost. And you really have to know what you're looking for and what you're looking at to try to get to an apples to apples comparison. You can see some really attractive interest rates, but they're usually in the assumptions, and a couple clicks away. In fine print, it tells you how many discount points it's gonna take to get that. And also, it's usually for really high credit, putting down a lot of money, like 25% down or more, along with those discount points. So just keep that in mind as you're looking online. Vet them out, make sure they're a good fit. If not, don't be afraid to look somewhere else, right? There's plenty of mortgage professionals out there, and once you're comfortable that your questions have been heard and answered, and you decipher between salesperson and mortgage advisor, you're ready to move forward. Now it's time to enjoy the rest of the home buying process.